Hi ladies and gentlemen, welcome to the 7 Money Show with me, your host Sean. Today we're discussing Tesla, the earnings, why it went up, why it went down, and a few tidbits of news that if you make it to the end. Well, to start with, we know with earnings a lot of the time there's a pre-anticipatory run up with a lot of companies. With Tesla, we thought it was going to hit profit. Tesla wouldn't have come out with shorts otherwise. When asked about his next me, he said bears were going to feature. I wouldn't have done that. No, because he would have looked a bit silly if he did. But and there's one thing he isn't, is silly. Now, I got slated for selling my shares at 17.80, saying there will be a correction when they're going to make a profit and be included in the S&P. I'm not going to say told you so or anything, because I thought there'd be more of a correction. I'm simply going to say, look at historical data. Even companies that have hit their earnings out of the ballpark, if you put in a perfect scenario, the slightest thing can knock them off track. The other thing is, a lot of companies who pick up their position pick it up before earnings, not after earnings. They've already taken their position up, so do not think they're going to keep buying. If people are not buying, stock price does not go up. And as I said in the past, you're likely to get people selling. You had a few retail investors buying and no one selling because of the earnings after hours, and that shot it up. But then once they stopped buying, all you had was selling action, which was itchy hands taking profits. And don't forget, throughout all this, for the past month or so, you have ETFs having to trim their position. Like even Cathie Woods has had to, and she's one of the biggest bulls on Tesla. Now we're going to get to a couple of reasons. Now we can see here, so we're getting more and more competitors coming onto the market, and I hear you saying there's no competitor to Tesla. Yes, I understand that. Tesla is number one in the market and you want to be holding number one. However, Li Auto is IPOing. NIO has been uploading videos where they're basically, not only is their autonomous driving program going well, nowhere near as well as Tesla, but it's going well, can take bends and the like. Not only is it affecting NIO stock price, now Ford are entering the electric market, and they are contracting Intel, who provide Mobileye for NIO, to provide Mobileye for them as well. So it's getting more competitive. NIO announced for their executive version it will be cheaper than the Tesla. That's before the subsidies, which they get because of the battery swapping technology. NIO announced patents because coming out for wireless charging, but that's a long way off, you know. But however, to discredit some of these other companies is wrong and short-sighted. Anyway, I'm getting a bit off track. I apologise for that. And don't forget to hit that lovely like button, almost as lovely as me. Helps with the YouTube algorithm and getting the video out to more people. And don't forget to hit that subscribe button if you haven't already. Become part of the Saving Money Show family. We give each other hints and tips and updates about stocks and shares we talk about on the show. As well as that, you can ask me to look into any share you want, and I don't charge a Discord fee or ask for a Patreon. All I do ask is for you to comment in the box below and hit the like button. Even if you disagree with me, especially if you disagree with me, I like a debate. And if I do something wrong, I want you to call me on it so I can improve the channel. And why not check out the links in the description below? There's lots of others. I've used each one of them myself. I wouldn't give you links if I haven't checked them out myself. If you're looking for a free trading platform which should trade your stocks and shares, you know, you can get a free share worth up to £200 for signing up and depositing a small amount. A free trade only requires a £1 deposit. The others require £100 or dollars, depending on which one you go for. Stake has over 3,500 US stocks on their books, which is the biggest one outside of the US. Whereas Trading 212 is one of the best and easiest platforms to use. But as I said, I use all three. Anyway, on with the show. Basically, one thing that was missed from earnings. This is the cash on hand from December to April. And one thing people didn't make a note of is in the last earnings call, I think Jeremy touched on it, but other than that, all the big names didn't seem to say anything, is their cash on hand went from $8 billion to $8.6 billion. It was just over $500 million increase cash on hand. Now, we know dilution's coming. They've already put the file in for shares. I've been one of the people banging the drum saying they should dilute more so they can set themselves up and not have to dilute again. But with $8.6 billion cash on hand, then that means they can put programs in place without diluting. I was saying they should dilute for $10 billion and get them set up, self-set up, and not have to dilute again. They may not have to dilute anyway. $8.6 billion, they can set up, pardon me, their charging network. By set up, it's already set up. They can increase it. They can put more gigafactories around the world. They can pick up lithium mine, and I'll be doing a video on why it would be beneficial for them to pick up a certain lithium mine in another time. Make sure you see that one. Now, you want them to be secure for the future, bringing in money. This is huge for them. The tax benefit, the Texas Gigafactory, the tax benefits they get for that. I mean, it saves Elon alone millions of dollars, if not billions, going forward. and I have a feeling he will make Texas the base of operations because of that. Yeah, that's some of the good news. Let's look at some of the bad news. Now, we saw Intel, the first one to go down. Why? Is chip. It lost 17% while AMD rose 17% because its chip was delayed by 6 months. It's a new 7 chip. No, 7 chip. And then the geopolitical sector with China, where all these tech companies have a huge range. Trade wars heating up. America and China are kicking each other out of their embassies. It's getting bad, like a new Cold War. For Tesla, it has a huge market in China. China is one of the biggest markets in the world. If they get kicked out, they won't get kicked out, but if they can't operate, then not only they lose a massive amount of money, but depending how long it goes for, then remember companies like Li Auto and Neo will start growing over there, and they don't want to start losing market share. Of course, I think in the short term they won't, but I think it will just be business as usual until things, it's only going to start heating up. Now, it is a factor institutions are looking at. This is another thing. Tesla will change alloy for Cybertruck. Now, I don't know if you know, they've employed a materials expert from Apple to change the alloy on the Cybertruck. Now, this is the guy who changed the 6S to an alloy that wasn't actually on the periodic table. It had to be put. So now, fact is, I've been saying for a while Tesla is overpriced. But then, likes of Amazon and a lot of tech companies and growth companies are overpriced. So if you go by the traditional valuation methods, they're all overpriced. However, if you look at Tesla, it was overpriced. It was due a correction. I was on my own and thinking that I've seen a couple of corrections and capitalised on it. But pure and simple, they should get in the S&P 500, but it's not guaranteed. I did a video on a split and on dilution. You might want to check them out. Personally, I think the one thing that will stop them getting in the S&P 500 is the fact their price on entry, they're thinking that it's gonna cost too much for the ETFs to be forced to buy them up. Now, I may be wrong, they may not think that at all, and they may be included with no problem, but there may be a delay, that's all I'm saying, and that will drive it down as well. a stock split will cure that. It doesn't have any effect to the share price, overall share price, doesn't have any effect at all. It brings the share price down for the market, so more retail investors can get in. Your shares, it doesn't affect. You get 10 shares for every one, you know, but just makes things more palatable and entry better and easier, smoother. Having that cash on hand makes entry smoother because they know they're not going to run out of cash anytime soon. The thing is, there are very few companies that gain after earnings. You get a couple, yes, but they're the ones that blow them out of the water. Tesla got a profit. We knew they'd get a profit, but they didn't blow it out of the water, and that's where Tesla did the normal thing and didn't go on an upward trend, not a constant upward trend. And I suppose that's unusual for Tesla to do something normal, but that's why we should focus on the positives. Focus on the fact that this Texas Gigafactory is going to be big for them. It's going to save them a lot of money. And this alloy for the Cybertruck, the institutions are looking at it as costing them a lot of money. But that if Elon's doing it, there's a reason behind it. You know, maybe he's not just looking into the retail market, maybe he's looking in the military market as well. Anyway, don't forget to comment in the box below and like, it really does help with the YouTube algorithm, and I'll see you in the next video. Goodbye.